Hello traders out there in Traderland. My name's Des Woodruff, your future mentor and senior analyst here at Grok Trade. And this is the weekend edition, good through Monday, September 5th, 2011, Monday, Labor Day. Markets here in the US are closed all day long. Report came out on Friday that no jobs were added in August, and the unemployment rate remains unchanged at 9.1%. Now, all the talking heads out there talking about, are we experiencing the beginnings of a double dip recession? Chances are that might be correct. After all, there were some unexpected things that happened in 2011, such as the Arab Spring fueling oil prices, the turmoil in Greece spreading through Europe, the Japanese natural disasters, which did upset global supply chains, and there's significant worries about the U.S. system here and the political fight over the debt ceiling and all between the Democrats and the Republicans. And all that mixed together adds for uncertainty. We traders and investors, we hate uncertainty, and that will cause volatility to increase. Fear will come in and the markets will drop. For example, on Friday, the Dow dropped 253 points, down 2.2%. The S&P down 2.5%, NASDAQ down 2.6%, and a huge drop in small caps, down 3.6%. The banks take nearly a 4% haircut. Pay special attention to this at the tail end of this video. We will be talking about that further. VIX spikes 6.6%. We're almost at 34. Gold jumps by 3%. A big jump in silver also. And we're looking at some extremely high prices, very much overbought right now on these commodities. Be watching those quite closely. Those things that get red hot tend to drop fast. And US dollar up 0.28%. Crude oil down at 1.3% on Friday. And that's where we're at. The trend, TRIN, closed quite bearish at 3.6. Let's get looking at some charts. We have the S&P daily, big symmetrical triangle, big breakdown, and we do this double bottom pops up, but all of a sudden we didn't have a significant run to the upside. A slight higher swing high, which gives us what's called a big bearish flag. Bearish flags are bad. Whatever this leg is, you could almost see the same leg developing right here. It's something to pay very special attention to if that comes to fruition. So we are watching this quite closely. We're still above the 20-day moving average. That's the blue moving average line coming down right now. That should act as support. If we break down below that, next real stop would be 1150 area, and after that we have this trend line, which would put us somewhere around 1134 area, some support. But if that does not hold and we start to break down, that would be a scrumptious play to be adding a lot of short positions. On the weekend edition, we like to look at the weekly and the monthly. The weekly, we had this big symmetrical triangle that turned into a big rising wedge with these two lines here. We broke down, down. We get a tweezer bottom type formation. We bounce up. We go up, and we hit the 50% Fibonacci retracement, and we come crashing back down. So we get the shooting star type formation here, and it looks quite bearish. It looks like the bulls could not hold up these higher levels. Bears brought them right back down. We're down below some, significant support areas. We have the 260 simple moving average acting as resistance, and then we have the 225 moving average, simple moving average acting as resistance, and the 200 could be acting as support. But we're starting to stay below these major moving averages, starting to consolidate at a low base, which would be more bearish than bullish. Now on the monthly chart, big rising wedge breaking down, lower high, higher low, But the point I want to bring up here is we're below 1200. That is no good. We do have a bearish divergence on the stochastics, and hard telling where this low will be. 1100 would be a real strong support level if we do get back down there. The Dow looks a lot of the same. This is the Dow 30. Big bearish flag. If you're not familiar with bearish flags, just go to Free Online Trading Education, go to our website, click on Chart School, and go to bear flags. Read about them, see a picture about them, and see what to expect when you get these. They're very powerful. 20-day moving average acting as support yet again on the daily Dow. If it breaks that, next support would put us around 11,024 area, and then be expecting 11,000 itself to act as some level of support. But if it breaks that, we're in a lot of trouble, especially if we get down below 10,745. And on the weekly chart, big symmetrical triangle breakdown, down, rallied back to the 50% Fibonacci retracement, has dropped, giving us shooting star type trade or for pattern. But in this case, the 260 simple moving average is acting as support, and we also have the 225 acting as support and the 200 that could act as support. So it doesn't look quite as bad as what the S&P does. If we look here at the monthly big trend to the upside, stochastics, bearish divergence. We come breaking down to this trend line, so we did break below it. The part that I don't like to see is this swing high back here at 11,386 or 87, and a support here. So resistance here, support here, come across. We broke that. We are below that. That is weak. Stochastics heading straight down. Now when it comes to NASDAQ, a lot of you guys playing Apple or Google or Baidu or Microsoft, even Red Hat, IBM. There's a bunch of people playing a lot of, or LinkedIn, a lot of technology plays out there. But this one looks a little different. Let me show this to you. Big symmetrical triangle. If I bring this in, big, almost ascending triangle, but that broke down. But what we're looking at right now is not so much a bear flag, but a broadening formation. Higher swing highs, lower swing highs. They're two trend lines diverging from each other. A broadening formation is more bearish than it is bullish. We do have support at the 20-day moving average on the daily on the NASDAQ. This is very important at 20-day. Everybody's watching the 20-day moving average. All the technicians, the savvy technicians, you need to be watching that. Also, that is something we are paying special attention to. Now, on the weekly chart here on the S&P, drop. Nice support down here at the 260 and all, but the resistance line, which usually acts as great support and resistance, is the 67 simple moving average acting as resistance. Right here, big shooting star has come right back down. We are below 2,500, gang. We are below 2,500. That is no good on the weekly chart. On the monthly chart, we have this big rising wedge. It's just now starting the breakdown. Again, we're below the 24 or 2,500. We're at 2,480 area, and we have big support coming up at 2,463 on technology. So be watching that big area. We got down near that area and held that ground. But if we drop below 2,463, woe to the markets. Mark that down. Mark an alert on that. Don't let that get by you. Now, Russell's small caps. A lot of times these will lead the charge. On the bullish one, or on the daily chart, it looks just like the NASDAQ does, a broadening formation down here. More bearish than they are bullish. Broadening formations are no good. The 20-day moving average, pay special attention to this. We have broke the 20-day moving average. If this is acting as a leading indicator, that means the NASDAQ is going to drop below the 20-day, then the Dow and S&P, not necessarily in that order, but this right here is worrisome. And we have the MACD crossing over, dropping. We're not below the zero line yet, but watch for a drop below the zero line on the MACD oscillator. On the weekly chart, big symmetrical triangle, break down, 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 down. Now check this out. On the monthly chart, you have what's called a bearish pennant. If you don't know what a bearish pennant is, just go to our chart school at freetrainingvideos.com and look at bearish pennant. And this pop, couldn't hold, come back down. This is in grave danger. We did close below the 260 simple moving average, bearish. We do have the 225 acting as support, and then the 200. When it comes to the monthly chart, we have this big uptrend. We broke through. Now we are closed below the 700 mark. We're below 700. We're at 683 right now. We broke some significant support. The support of 687.5 was huge. Coming across this resistance, support right here. Boom, cracked below it. That is worrisome. So the markets, any way you shake it, are in bad shape. I want to show you sector rotation here. I'm going to bring in FinViz. So feast your eyes on this. Just go to finviz.com. You can see their website right here. For the week, basic materials did the best, and we saw that with commodities such as metals, gold and silver and others, up 1.3%. Usually in a recessionary cycle, you have your materials get very strong. That's precisely what we're seeing here. Utilities also in a recession tend to get strong. We have that strong right now. Financials doing very weak. So is conglomerates. These two you can almost put together. They're not doing well. Technology is down here also. Remember, the markets are only as strong as the financials. For the month, gang, check this out. Financials there's a huge exodus taking place here in financials, down 6.6%, dwarfing all the other movements anywhere else here. So this is something that is we have to pay a lot of attention to this. On 3 months, financials at the bottom, down 15.7%. 6 months, financials at the bottom, 21.3%. For the 1 year performance, financial is the only one in the red. Gang, the markets have been going up here as of recent, but the damage that we received last month was significant. So to say we're going to bounce back from that, especially with the sobering economic news we have, is a pipe dream. So the markets are in significant trouble right now, and you need to be paying special attention to that itself. Now, if you haven't taken the 101 courses yet, I spent a huge amount of time to make those a fantastic grouping of teaching instruments. Very systematic, very intuitive for anybody to go through. I don't care if you don't know anything about trading. A lot of my video today was a little more advanced, so probably a lot of the things I was sharing went over your head. That's okay. This can all be taught to you. Go through the 101s. They're free. The 101 courses will give you 5 courses with 30 lessons inside those courses. It's over 4 hours on teaching you about trading. Now, if you've done that, you understand that, but your trading needs more formalized trading education, we've put together something. It's a value of $3,500. I'm telling you, what we have put together is priceless. I taught for Rich Dad Poor Dad, Robert Kiyosaki. I taught for Teach Me to Trade, Star Trader, Option Success. I'm a mentor, coach, contracted with these guys. Now I am the president, owner, and founder of freetrainingvideos.com Incorporated. What I'm delivering to you is priceless in the 201 courses. There are 5 courses. There's 28 lessons, over 6.5 hours worth of trading education. The 101s will teach you about trading. The 201s will teach you how to trade. I will be giving you my secrets, my tips, and tricks in the markets. You can get that in the 201s. I'm doing something very special for the Labor Day time here. The Labor Day special is this. It's a $700 ticket item that's worth $3,500. It stickers at $697, right at $700. and I'm going to knock off $125 on that. That's good through this weekend to Labor Day, and I highly recommend that you do that. Matter of fact, before you even think about coming to us for mentoring, you need to be at that level of knowing how to trade, at least know how to put on orders, know what the market internals are, what the indicators and oscillators are, how to trade before mentoring is right for you. The 201s will certainly give you everything you need. We'll cut out all the fluff, give you just what you need to be able to trade with huge confidence in the markets. We do have a mentorship coming up. We only do this once a month, and we start off with a 3-day program, and it's done live online from the comfort of your own home, but it's very private with us and a few others. And it's September 17th, 18th, and 19th. That's a Saturday, Sunday, and Monday. And I highly recommend that you look into that. Everybody needs a mentor, and I'd be happy to help you learn more about that. I would contact Carolina at, like, North or South Carolina at groktrade.com. Talk with her, and she's a student. She's been through the program. She's a full-time trader, and she loves to talk, and she'll be happy to talk with you about what the mentorship's all about. So there you have it. Take care, and very safe trading to each and every one of you.